Good morning, everyone. Welcome to the On Time, On Target morning show. We got a great show for you today. As you can see over my shoulder there, today's topics, we're going to talk about the Apple event that's going on. The iPhone 12 is going to be released today. That's at noon Central. Amazon Prime Day started in the middle of the night last night, so that's pretty exciting as far as the big sales that are going on for the next 2 days. And then lastly, earnings season kicked off in earnest today with some of the names you see down below that we're going to talk about. So, yesterday was a quasi holiday, but the markets were open, low volume, if you will, but a lot of movement as far as the names that we're going to talk about today. And today's tickers, you can see down there, Apple, Amazon, of course, related to the big events they have today. We're going to talk about earnings of BlackRock, JP Morgan, J&J, and we'll talk about the index fund iBuy. Over my other shoulder, you can see our day trading scorecard from last week. We didn't trade yesterday because we weren't up, but 4.5R last week. So again, if that's $100 that you're risking that to make 300. So on the course of the week, we're up 4.5R. That's $450 if you're a $100 type person. $350 person is up over 1,500. So that's the reason to join us. You're on a replay right now. But if you want to join us live in the morning, more information is at ototnow.com. You can join us for $25 a month. And with that, let's go ahead and get started. All right, good morning again, everyone, and welcome to Tuesday, October 13th. Here is our morning brief outline. Make sure you have your chat window set up correctly. Make sure you have your Q&A window set up correctly as well. All right, standard disclaimers to the financial education presentation, so you have to do your own due diligence before you act on everything you hear this morning. All right, our mission objectives is grow our money, protect our money, and live off our money. Specifically, what we're looking for there on our investor topic today is the Apple event. Again, from an investor perspective, the Amazon Prime event, that's another big holding that I have personally as well as professionally. And then, of course, earnings season is where stocks tend to move, and also gives us kind of an idea of how we're doing in relation to where we thought we would be. Coming out of COVID, you think back quarter two, obviously kind of a disaster. And then going on into, did we recover significantly in quarter three? Yes. Well, now we're reporting those numbers from quarter three. So again, expecting a lot of really good numbers to come out there. All right, our tactical objectives. We talked about the investor topic already. A question of the day is going to be, how do you listen to a conference call? Now, you may not, but you should at least be aware that they're out there. So we're going to talk about what conference calls are, since it's an earnings season. And that's honestly where the meat is sometimes, where you get an earnings report, it's just numbers, but then when you get the conference call, you get a chance for the different analysts out there to ask questions that they have of the C-suite executives to determine, whether or not they're actually going, forward or with increased positivity or staying the same or actually guiding down from there. All right, our flow for today, long, short, open, short, long, meaning we're going to talk about long-term investing stuff. First, we're going to go around the world, look at the markets, we'll look at our own futures, and then we'll look at the headlines that are carrying the day. From there, we'll switch over to the primary tickers that we're going to take a look at this morning, and I'll give you my buy or not buy recommendation on those. Then we'll switch to the day trading stuff within 5 minutes of the open. There's so many things in motion this morning, I didn't even take notes, so we'll pull those up real quick. We'll look for probably longs, maybe a couple shorts that are in there. I'd rather take stuff short if I can, because that works better for our particular strategy. We'll execute the market open. As soon as we're out of our trades, we'll transition to your questions. So remember to populate those in the Q&A window, as well as if you have some stuff in the chat, make some comments there, and I will clean all that up, end with the question of the day, and then we will be off to our regular day. All right, chat usage and contingencies are standard out there. All right, let's go ahead and take a look at the TD Ameritrade platform, which is here. S&P 500 is what you're looking at from a left to right perspective. That is a 1-year chart. Of note, when you focus in on the right-hand side, pretty strong recovery going into October, which is a little not what we expected, right? We expected the markets to sell off, but this is the reason exactly why when people say, Steve, it's obvious, think back into September, it's obvious the market's going to sell off prior to the election. I'm like, I agree. And they're like, well, it's obvious that there's going to be a better entry point before now and the end of the year. And I'm like, I agree. And then they say, so let's go to all cash and then we will buy in later. And I'm like, well, now I don't agree, because the first two parts of that is something we think is going to happen. But with markets, they like to make fools out of everybody, I like to say, is that you don't know what's going to happen. So you don't go to all cash. You get out of some speculative stuff and you only hold best of breed stuff that you plan on holding through really any downturn anyway. But you don't just go to all cash and you sit in all cash, because of this very reason, is that if you're in all cash and you have a move like we've just had of what, almost 12 days straight up, then you're wrong. And now you have a real problem on your hands that you went to cash. And when do you re-enter? And your advisor, i.e. me, says, I don't know. I wasn't the one who put you to cash. I don't say that to clients. I say something nicer like, well, we'll have to look for a better entry point. But that's really saying stop going to cash just because you know what's going to happen in the market. So we've been 5 days straight up. Do I expect us to sell off in the election? Yes, I've expected that for some time, and I've been wrong for some time, because the market just continues higher. Here's the last 5 days. I don't know if you could draw a straight line on a chart, it probably wouldn't even be this pretty, right? It is a straight move up, including yesterday's low volume day. It turned out to not be a low volume day, and people started hearing what's going on and came back to work. Generally, your pros are going to take days like that yesterday off. And look at the volume going into the end of the day. There was pretty actually significant compared to other days. So kind of that is the fear of missing out. A lot of phones ringing late in the day, like, hey, what's going on with Apple and Amazon? I'm like, well, tune in tomorrow morning, because I will tell you exactly what's going on with them. They have their big events. It's one of their biggest days of the year for both of them. So that's why they would move up 6% and 5% yesterday. You see the futures were kind of selling off a little bit going into the market open. As far as our earnings calendar, there's so many. This is day one of earnings season. So many to talk about that I'm not even going to pull the chart, but I will. Those are the screens we'll come back to for the day trading here in a little bit. All right. Good morning. A couple folks checking in there. Good morning to you guys as well. All right. Let's go to CNBC. We're going to take a look at the headlines we have in the market right now. All right. Let's refresh real quick. Okay, so there's where we are with the futures. NASDAQ was up almost 1% early on. So this is where you see this NASDAQ futures jump. It sold off pretty hard, only 3/4 of a point since really about 5 minutes ago, to be honest. So we'll keep an eye on that. Maybe there's going to be negativity in the market. When I say there's low volume yesterday, and a couple of folks that contacted me said, hey, what's going on? I thought you said this was low volume. And I'm like, I do. I agree. But we'll kind of figure out where the price actually is on things today, because kind of everybody's back to work, if you will. So we'll take a look. All right, the European market's down pretty well across the board. Bright red, you see Europe pretty much in the green. There's our numbers from yesterday, 2.5% move up in the NASDAQ. It's tough to kind of maintain that kind of move, but we shall see. Bonds 0.7, almost 0.75, so it's a little bit off yesterday, but a lot of this came out over the weekend. We, 0.8 up closer to 1 would be a lot healthier than we have been in a while. All right, taking a look at oil, stabilized above 40, barely, but it's been there. So we shall see. And then precious metals selling off across the board. Couple percent in silver. Again, if you want to play that, play it in silver. All right, back to the U.S. headlines. We will talk about the some earnings stuff. So you have JP Morgan beating earnings. That's a ticker we'll take a look at on the big screen here in a second. Delta posted a huge loss at earnings this morning. Let's see, AMC run out of cash by the end of 2020. Yes, you also saw Disney's pivot yesterday. They said they're going to be where they're online streaming primary. So that's different from the theme park based primary slash headline blockbuster movies base that's been their motto for decades. So pretty big switch out of Disney, and we'll see. If they're going to switch like that, they may consider breaking up. I've said that before. All right. Ooh, this says will be, so that sounds like the number's out. CPI-W is what determines the Social Security increase annually every year. That comes out mid-October, i.e. now. I've been waiting on that number, and it was projected to be maybe 1%, so 1.3 is kind of nice. So if you're on Social Security, congrats on your pay raise. If you are a military retiree, i.e. like myself, our deferred compensation plan, i.e. the pension, is also increasing 1.3%. So I consider that a high five across the board. Okay, biggest headline out of the COVID world is J&J had their earnings this morning. Of course, they crushed it, but there are issues we've had our first adverse event, meaning we've had what's the term? Somebody who had COVID got it again. That has not happened in the United States. It has now happened. So that's the change there. And evidently, out of the folks around the world that have gotten COVID again, some symptoms are a lot lighter. The others are a lot greater. So this is a case where the person here in the United States is having really, really bad symptoms the second go around. So obviously, that will bring out all kinds of second wave talk, and we will see where things go from there. All right, we're in a bad place. Yep, okay, we shall see. New streaming focus out of Disney, we talked about. Blue Origin launch, all right. I haven't tuned in at all to the Supreme Court hearings, so hopefully they aren't nearly as ugly as the last time. And I don't think SNL, maybe they carried a piece on it. That always tells me how things are going. But we'll see how that goes through the week. Again, continues to be a political battle. All right, Amazon Prime Day, it's already started, so might as well talk about it now. Started last night. So again, 2 days of deals. I have not participated in one of these, but I guess if you go to Amazon Prime, you can log on. They have what's called flash sales where things are discounted. So you can actually mark things that you like and you hope that are discounted. And it takes that data, aggregates it. So if there's a whole bunch of people worldwide that want stuff discounted, then boom, they discount it like 30-40% until it's gone. So they're literally, it's kind of like a Black Friday-ish type thing. There's a little bit of a game to be played there if you are a competitive shopper, if that's your thing. So check it out. Target is also having Target Days, which is 48 hours of the same thing. Walmart's having some form of online, I forget what the fancy title is, but they're competing. So if you're looking to buy stuff, now might be a time to do that because you're not going to get your Black Friday. At least that's what everybody says. I kind of think there will be plenty of Black Friday-like things popping up here soon. All right, let's take a look at some stocks, individual tickers real quick. Apple, you know about the split, which is here at the end of September. So obviously everybody runs into the split because obviously the shares, when they drop in price, are going to be undervalued now. You know my take, nothing changes. $20 changing for a $20 bill for $4 or $5 bills, but whatever. People love it, so they buy into that event, and then of course it sells off. And who cares, because you're going to hold Apple for the long term. Apple has since recovered, and of course yesterday had the big move up going into Prime Day. All right, let's take a look at Amazon. You see kind of the same thing. Amazon didn't split. And I don't think Amazon will split, to be honest, because Bezos is very different than some of these other folks. But you have the huge run up until September. There's an overall 10% sell-off in September across the market, but basically went from 3,600 down to below 3,000, which again put a buy signal out and picked up some more shares there. I've stopped buying now, and it's 34.40. I'd imagine that probably creeps on up to 3,500 here soon. I don't think Amazon gets touched by the election, which is why it's one of the names we're going to hold no matter what. So, but those are some of the names out there. Let's go ahead and take a look over at the screen for Schwab, which is coming to you right now to talk about the other tickers I said I'd talk about. So I wouldn't buy Apple or Amazon here unless you just don't have any, then buy a couple shares so you have some. But for the most part, when you look over at the screen, make sure I have that shared out correctly. It is, gotcha. Okay, we have Apple here, Amazon here, both are long-term holds. BlackRock you can actually buy here. BlackRock is the biggest asset manager in the world. All those ETFs that are out there, that make, you know, a fraction off of your money. This is BlackRock. They got the contract for the government to from the Fed when the Fed says we're buying individual stocks to prop up the bond market, which we haven't heard anything about, but I think they're still doing. As soon as they said that, they said, okay, well, BlackRock is the company we're going to charter to do that. JP Morgan is a buy right here. You can buy it before the election. Again, I think it's been beaten up and has not recovered enough to where all the financials are positioned to go higher out of the election. J&J, I wouldn't touch, is the only one up here that I like the company, but I wouldn't buy more right now because it's run up so much. And then the one that I really like that if you're not in it, you have to say, I missed it, was iBuy. And that's obviously when COVID hits, that tanks. And this is Amazon plus everybody else out there, including your Walmart, your Targets, that all have the online presence. Obviously, that's been kind of a straight move up under the work from home environment. All right. So those are the long-term thesis tickers we have to talk about today. Again, most of them are holds and a couple are buys. Right now. As far as switching hats into our day trading stuff, we're going to look at a few things. Disney is gapping up over 5%. You know the thesis there going to streaming. EXC report suggesting potential spinoff of non-utility assets. So we'll take a look at that. That also meets our 5% criteria with a juicy headline. Nothing else is 5%. Upgrades, nothing is 5% there. Fastly off 3%. And then looking at other gapping down names. Again, if you have a name you want me to take a look at, throw it in the chat. All right, there's RCL. That's a cruise line out there. So a Royal Caribbean gapping down over 5%. Kind of some desperate moves here. Normally I don't touch the stock offering / notes, but they're borrowing money to stick around, right? AMC not gapping quite down as much for our strategy, but we're going to take a look because we know that was one that also likes to sell off as well. And then Beyond Meat downgraded to underperform. We'll take a look at that in addition. All right, so that's what we have. So for as many earnings that are out there, not a whole lot of names moving as much as I would like, but let's go ahead and take a look at exactly where they are. Taking a look at our two longs first. Disney, DIS. All right, plenty of volume, 125 up to 130. So here's where it sits right now. Could it go up to 136 or so? Yeah, we would need probably a dollar stop on Disney for that to happen. We will look at EXC. Exelon Corp, making sure low volume, so we can't really take Exelon. That would be a delayed entry. I do like how much it's gone up though, but we shall see. It's a bio name. See if anything pops off the list down here. NWHM. NWHM. Probably gonna be low vol. Yep, it's low vol as well. So delayed entry. All right, let's look at the shorts real quick and then we will get set up. Royal Caribbean, plenty of volume, gapping down, plenty of room to fall. I like that. Let's check that out. AMC, down in the tube. I like that as well. And then 3.6, what, Beyond, BYND. It does have the volume, so for a short there. All right, so we're going to look at Disney long, and then we'll look at Royal Caribbean 2, and then Beyond Meat 3, and then keep AMC in mind. We'll set it up for that. All right, sharing out. There's our ThinkPipe screen. 1 minute till the open, so we have SPY on the left. We'll get our long here, which is DIS. More inclined to take the shorts today. We'll check back on the market at the open. Our shorts are Royal Caribbean there in the middle, and then we have Beyond Meat off to the right. All right, 10 seconds to go. Welcome to the on-time target of the day. We have a SPY up here. We can watch the overall market. We have Disney long, we have Royal Caribbean short, and Beyond Meat short. Again, I like the shorts better than long. There's our opening bell, so we'll zoom in here a little bit. You can see the futures are kind of trending down, so that's why you're leading me into the shorts a little bit there, but we will keep an eye on that. excuse me. Royal Caribbean down 7.5%. Beyond Meat dropping as well. So we're going to let these things just kind of go for a second. All right, Royal Caribbean at $64 price point. We need about 60 cents for our entry point. I like that it's backing up some. That would be nice. That's going to be short covering. See how much of it we actually get here. Over here with Beyond, again, you're looking at $1.50. So 60 cents and $1.50 for our stops. Disney, you'd be okay with $1 if you want to take that long. Not as excited about that name. Well, there goes Royal Caribbean. Here was the backup. So that was kind of our entry point. So maybe we aren't going to get this. Let me take a look at AMC real quick. I like AMC better here. So 6.6% down. We're going to take it. We'll wait till it hits 379 and then we will take AMC short. So you can load up on this. We're going to have we will do an 8-cent stop on AMC short here because there aren't going to be that many buyers. So again, waiting for that new low. There it is. So there's our entry point for short. We'll take the arrow down here so you know where it is. Again, we're talking 8 cents. So 379 plus 8 is 388. So here's our first stop up here. Again, this would be the we're out of the trade stop, so we don't want to see that. And then we're waiting for it to just fall over time. So we're in the AMC trade. Looks like Beyond Meat is falling like a rock. Don't have a real entry point there. I'm going to get rid of Disney long because we've had 3 red minutes in the market. So we'll look at, bring back our RCL and see how that one's doing short. So I like our trade. AMC is kind of a hated name anyway with a negative headline, so just let it fall. We have, what did I say? Did I say an 8-cent stop or a 9-cent stop? 79. All right, I called a 9-cent stop here. I thought I said 8, but we'll go with 9. We may adjust that stop down a little bit. We go with 9, so 370, that's our first R down here. To get to 3R, this has to go all the way to 352. That may or may not happen, so we might adjust it. We'll see. But have your ticker set up. If you see 352, kill it out of the trade and take your 3R. But what I don't see is any real reversal out of a stock like AMC. Beyond Meat, you could get somebody convincing themselves to buying it, which is why you see these kind of big dojis at the bottom. So I don't really like that. And then, of course, RCL just rolled over and fell off the cliff. Because who's buying a cruise line going into the second wave? Ooh, spooky, scary. We don't look at it from that perspective. But, oh gosh, we would need this to back up significantly to be able to get an entry in this thing, which is probably not going to happen. So we're in the one trade. We just have to be happy with that. We're about even where we took it. So you could take it again right here or add if you wanted to. I just don't see it going all the way back here. If you want to be super safe, you can go 392 at above the high of the day. I don't think it's going to get near it, so I'm not worried about it. All right, let's start. We'll use this right panel here to just take a look at the long names we had. So Disney, real quick. That's the one we had over here on the left. All right, so Disney's struggling to go higher off of the news, so it wouldn't have worked. EXC, which again was a biotech, it didn't have the volume to go long. So it did in the first minute, so that's 180,000. So it's got plenty of volume in now. It's not getting any love though. So pass on that. And let's see, NWHM was super low volume. This was another biotech name out there. So we'll see what we've got. And doesn't even look like it's open. Or it's so traded so thinly, you're not going to get any movement out of that. So that's it for our trades. Obviously, here's where we are. We'll zoom in just a little bit so you can get a little better look at that. But I want to keep the arrow in case you're late to this trade. Again, you can take more here. It's going to sell off throughout the day. All right, let's put in a couple other names to see how Apple is doing today. Ooh. That's kind of surprising. So this is kind of what I'm talking about with the when there's what call it Robin Hood Day, right? Because a lot of your professionals on the big weekends that have a holiday, either a 3-day weekend, they'll take the Friday off before, or a holiday like this one, Columbus Day or Indigenous Peoples Day, depending on how you refer to it, to where you don't have everybody at work. So like any other industry, there's a big weekend and you try to maximize it. Same thing in the finance industry. So if anybody's on the trading desk, it's going to be your new folks, which may not have the authority to go big into lots of things that set up. So that's what I say. It's not necessarily amateur hour, but generally you don't have the full pros on board, and you'll see this more on Fridays going into 3-day weekends and such. So a lot of things can happen when there's not necessarily the stable players that are in, and the big money is not necessarily in. Stocks can move a whole lot. So if you see a stock like Apple shoot up 6%, it's like, gosh, that seems a little optimistic. And then sure enough, it sells off a little bit the next day. Apple, since it's one of our topics of the day, is generally a buy the rumor, sell the news type story. So buy the rumor, iPhone 12's coming. There's 4 different versions, 3 different sizes. There's a Pro and a regular. The price points on them are all better than the iPhone 10 from two years ago. So, a little bit smarter, I think, play by Apple to get this iPhone 12 out. The Pro version appears to be all camera related. So I generally try to get the best of the best, top notch. I'm not sure I need to pay another $300-400 for the super duper camera. I probably will, but I probably don't need to. But so when you think about other people making that decision out there, we'll see if they do or not. Apple consumers are pretty loyal followers, so they tend to buy, spend the extra money when they make their purchases, because you don't make a whole lot of purchases, for iPhones every couple of years or so. But we shall see. But certainly once the iPhone 12 event happens today, the stock tends to sell off because the people start picking apart every little thing. Oh, it's not as good as we thought. So that's the sell the news sort of mentality that goes on with Apple out there. So down 1% today. I'm not worried about that. All right, let's look at Amazon real quick. It's up a little bit, but it also gapped up as well. So hanging around that 3,400, 3,450, I think it does creep up to 3,500 in short order. You don't really have you don't have a product that you can pick apart like Apple does. So all you're going to get out of Amazon is the good news. Here's the total volume, Black Friday type numbers. We've sold so much product, blah, 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 that sort of thing. So that's Amazon. Let's check on Luckin real quick, and then we'll go around to all the bigger names. But Luckin has been selling off in a red day in the market now. The market's red across the board. Hey, Luckin's battling back to the upside. That's kind of funny. So, all right, we're in that one trade there. We are up half an hour because we are going short. That's what that arrow tells you. So we'll check back to this in a minute. Let's go over to the big board here. All right, we've got Disney up. We've got BlackRock is the name we talked about. Luckin in play. Northwest Bio has been on fire. GoDaddy, Trade Desk. So a lot of the tech names, a little continuation from yesterday's move up. The NASDAQ, a little bit, everything's between about 0.25% down, so just barely in the red. Let's see. Those are the green names. Let's look across at the red. Workhorse been kind of hit. There's been some speculation they aren't going to get as much of that U.S. Postal Service contract as they thought. We'll see. It's speculation for that very reason. Canopy Growth is a marijuana name. Again, the vice presidential debate had candidate Harris out there talking a lot about the legalization of marijuana across the country. So those names popped last week. Delta and all the leisure stocks are going to sell off today because of the second wave sort of thing, I would imagine. All right, and some other names out there to take a look at. Let's go back to our trade real quick. So here we are, it's about the same area. And I'm going to share out to you the question of the day. No questions from the crew out there, so nothing to answer for you all. So I will answer my own question of the day for you, which is the earnings call. So we're in the earnings season now. So what you see in front of you is Investopedia. What is an earnings conference call? Well, when you think of earnings season, what that is you have three numbers that come out. And again, those are numbers. And then about an hour later, you have the conference call. So you have the way it's structured is that way people can digest the numbers and get their questions ready and then go in front of the C-suite executives to answer them. So they report top line, bottom line, and forward guidance. So what that means off of balance sheets is top line is revenue. So again, before you count any expenses, that's total dollars, brought in through products of sales or products or services. And then you have bottom line, which is now your earnings, to subtract out all the expenses, and you have your earnings. And then you have the forward guidance, which is where they update their numbers of, well, here's what we made this number. We either missed or made our numbers. And here's what we anticipate for the next 4 quarters by quarter and then year or 2 years out. And there's some options for how far they go out on their guidance. Most go out at least a year. There's obviously risk if you go out past that because there's so much you don't know that can happen, like a COVID-19. All right. And then after that comes out, the market almost always reacts to whatever those numbers are, whether they meet expectations or not. And then there's the conference call. Now, the conference call is, you can listen to this virtually there. If you go to the investor page or whatever Apple, whatever company is, like apple.com investors, and it'll have a link for you to go to and you can listen. You will have the heavy disclaimer up front. So like a 2-minute disclaimer where mine's, 15 seconds, theirs is a couple minutes. Then you will have generally the CEO say a few words and announce the numbers. You will generally have the CFO hop on after that and kind of detail what the numbers are saying. And then you open it up for questions. And the questions are where the real gold is, because that's where folks will ask the hard question. Like Disney with their earnings, it's just like talk about me about how does ESPN fit into your new streaming service only sort of thing? Is that going to be a net gain for the ESPN segment, or are you ever going to look to spin off the ESPN segment or spin off the theme parks? What? That would be insane for Disney to say something like that. So we'll see. And if they answer, well, we're not going to spin anything off, then the question becomes, well, then what are you really adjusting your strategy, or are those just words? So that's an example. So what is a conference call? Back to here, and then we'll close things out. Here's the basics. Analysts are invited to this. And again, you need to be on best behavior. It's kind of like the White House press briefings. There's no entitlement for you to be there. So if you're going to be there and ask questions, you need to not be a jerk about it. Otherwise, you won't get invited back. And nobody can't get an answer to your question if you can't ask it, right? So that's how it gets in here. After the earnings conference call takes place, here's what to listen for. After it all takes place, then the transcript from that goes out about half an hour after the earnings call ends. So it takes a little while for the AI to go in and transcript all that. Then a human goes through and cleans it up so it's not gibberish. So as soon as somebody goes through and cleans all that up and they hit publish, then that's the earnings call transcript. That's generally where I come in. An Apple or an Amazon or a Facebook, I might listen, especially if I'm listening for one particular thing to hear of what they're talking about. Otherwise, I just wait for the earnings transcript, and then I can scan through that or search through whatever terms that I want. So anyhow, that's how I use it. If you're super into it or you're bored, you could listen to a conference call. They are not exciting. Every now and then the question and answer can get a little controversial and a little heated. Most folks are on their professional behavior because they know it's going out to millions of people, so they aren't. But if you go to the Tesla conference call, Elon Musk can certainly shut you down. In other words, if you ask a stupid question, he will tell you that's a stupid question and then crap all over you in front of the live audience, and then that transcript goes out, and of course the memes and things that come out of that. So a lot of folks generally don't mess with the high performance CEOs, if you will, out there. All right, so that's all I've got for you today. We'll go back to our trade real quick. It's basically sitting there, so you can really just leave this. So I like to close these out for you. You see a lot of resistance in this area where we got it 3.76 to 8 or so. So again, what's the market going to do today? We don't know, but certainly coming off a big green day, we could have a red day. today, already a quarter point across the board and kind of trending down. So 15 minutes into the trading day, I wouldn't worry about this. I would still keep my stop here at 388. If you're super nervous type where you don't want to get knocked out of this trade no matter what, you can go up here to 392. That kind of messes up your R math a little bit, but that's okay because you're just going to set a stop and then go about your day. Set your alarm to check back in 5 minutes prior to the end of the trading day and get out of your trade. So we're looking at either it's, it'll kick us out if we hit 388 or down at 352, which is the 3R point. So set your stops there and then come back 5 minutes prior to the end of the day and kill the trade wherever it is in between those stops. And then that's going to be our score. So, all right, that's what I have for you today. Thanks for checking us out. Again, hope you like the new format and we will talk to you next time. Bye.